Hello, grads of FinLearn Academy and fellow traders. In our weekly recap, let's see what lies ahead for the next week. Nifty has made a low at around this level, and the low was made by a doji candle, and then we are moving up. So we are seeing a swing high in which that the swing high means that there is a trading low is in place. We had this high. From there, we declined, and now in this move, we have crossed the last swing high. So this says that market is there is an upside to this markets. So now let's analyze where and how high this market can go. Where are my support levels and what I should expect. See, the first thing is the gap over here. Whenever the upswing happens and the upswing is extending, we should hold above this gap, which is 17,300 to 17,250 levels. So this gap is your immediate support level and risk management point. The current upswing, what we are seeing, is likely to continue till we are holding above this gap. And any dips or declines towards this gap should be seen as a buying opportunity for swing traders with a stop loss below the gap area, which could be anywhere between 25 to 50 odd points on Nifty. Now, another thing is around this gap, you have your 10-day moving average. So once prices are into a reversal mode, which is a swing reversal, see, you have a 10-day moving average, plus you have a gap around this level. So any declines in the near term should find support at or around the 10 DMA over here, right? And at the same time, the current upswing for the last 2 days, we are seeing a consolidation. This consolidation is happening around this resistance level. B, this consolidation is happening around the 20-day moving average. So the application which I am using is M-Trade. So 20-day, I will put it with white color. So prices on Friday have closed above the 20-day moving average. So we should see upside, and in that case, we should test higher resistance around 17,900 odd levels somewhere here. So what key thing is that this market, which was in a downswing from this high, making lower highs and lower lows, have now reversed to higher lows and higher highs. So that way we are seeing a pullback or a short term upswing in the markets. And having said that, volatility will be there, and any dips or declines towards the 10 DMA or the gap area should be seen as a buying opportunity. And once this high is taken out, the next logical targets for Nifty is it broke this base over here, which is also around this high. So this 17,600 will offer some resistance in the short term. Once that is crossed, we can expect the test of highs around 18,000 odd levels. So that's the Nifty for you. So with the support and stop at 10 DMA, we are aiming at 18,000 on the upside, and choppiness of volatility will be there. Till this gap is not filled, our bias for the markets will remain positive. Even if there is a 100, 200 odd point decline towards this gap, the first touch of the gap will always be seen as a buying opportunity rather than looking for further declines. So now you have clear cut that this upswing is in place till we are holding above the 10-day, which should be your trailing stop loss. Or if you are initiating fresh positions, it should be your risk management level on the long side. So this market has reversed this downswing, and now we are getting an indication of an upswing. But resistance are at every 50, 100 odd points. So don't expect a runaway move from here, but a trending move from here. Now let me take you to Bank Nifty. See, same is for Bank Nifty. Bank Nifty currently looks stronger than Nifty. Why? Because Bank Nifty is also around the 20-day moving average, and last 3 days it is consolidating. And if you see in Bank Nifty, the gap it had filled, and the gap it had filled uh, and saw a bounce from there, and this bounce can take Bank Nifty further high. So again for Bank Nifty, this area between the gap and the 10 DMA, which is at 36,000, is your risk management level. And the sideways consolidation, once breaks on the upside, it gives you a move on the upside, which could be the break of this low was the support it broke. So on a role reversal, we can expect Bank Nifty to reach the highs once a breakout happens all the way up till here, which is 38,431. So going forward, next week, your key levels for risk management buying or supports both on Nifty and the Bank Nifty are the 10-day moving average. Till we are now not closing below that level is an indication that the upswing is intact. Once the 10 DMA is breached, then only we'll get evidence that further low will be there, or else we are stopping here for the next week and expecting a bounce or a pullback both in Nifty as well as in Bank Nifty. So prior, the charts are quite clear in terms of the swing, which is up, the risk management level, which is the gap, and the 10 DMA both for Nifty and Bank Nifty. And upsides are clearly defined, which was the last low which it broke, uh, which was a support level when breached, now is a resistance. So this becomes your guiding targets. So trade on the long side, buy the dips towards the gap, keep your stop around the 10 DMA, and that's what going forward market is likely to be next week. Choppiness will be there, and once 10 DMA is breached, then we will say that further downside possibilities there, or till that point of time this is a cutoff point for long, and yes, we are trading for a pullback on the upside. So that's all for the weekly update, friends. Thanks and have a nice week ahead.